Hello, good evening. My name is VincentAnthonyAbu. This is my submission for our Week 5 YouDecide assignment for Business 319 Marketing, presented to Professor Mikhail Shikadins. The scenario presented is as follows. I am a marketing consultant for a specialty coffee bistro and bakery. The business has been operating for about a year and is still not earning a profit. My role is to determine the break-even point and make recommendations on changes to one or more of the 4 P's of the marketing mix, which is product, price, promotion, or place. The break-even point is a point at which the total cost and total revenue are equal. A break-even analysis calculates the break-even point as a point equals total fixed costs divided by the difference of the unit price and the unit variable costs. To calculate the total revenue, you take the quantity of orders sold and multiply it by the average order price, which in this case is $11. A variable cost per order is designated at $5. This is usually the cost of raw materials, production costs, etc., which tends to increase with the quantity of orders placed. And able to determine the variable cost, you have to multiply the variable cost per order and the quantity of orders placed. The total fixed cost in this scenario is rent, which is $2,000, utilities, which is $400, and labor, which is $3,000 per month. The total cost of expenses is acquired by adding both the variable and the fixed costs. The total profit is calculated by taking the total revenue, then subtracting the total cost of expenses. After determining those figures, you can calculate the BEP. In this example, the BEP is equals to the total fixed costs, divided by the difference of the average order price and the variable cost per order. The break-even point is equal to 900. This means we have to sell more than 900 orders and able to turn a profit. We are currently selling 750 orders per month. We need to increase sales by a minimum of 20% and able to turn a profit. Increasing sales by 20%, meeting the 900 orders per month, our total sales would equal $118,800 for 2019. The total variable cost for the year is $54,000, which is approximately 45% of sales. And the fixed cost is $64,800 for the year, which is roughly 55% of sales. Since 900 is our break-even point, this will give us a gross profit of 0 for the year. By increasing sales, you can see an upward trend in revenue in the following years. Estimated income tax is roughly 20%. Since the gross profit for the year is 0, we have 0 tax liability. The net earnings are calculated after subtracting the income tax from the pre-tax profit. My job is to increase our profits. There are only 2 ways this can be accomplished. We can either cut the costs or increase sales revenue by either increasing sale prices or the quantity of orders. The table presented in this slide incorporates a sales increase of 20% every year for the next 5 years, taking into consideration specific assumptions listed. So how would we increase our revenue? Our first option is to raise pricing. Utilizing this option, we must consider our competitors and their pricing strategy. If we price our products too high, we risk losing sales if we cannot justify increase in price. Second strategy is to offer a better promotional pricing. One option would be to offer a loyalty program to repeat customers or for customers buying in bulk. Another option is to draw another revenue stream. This can be accomplished by selling products online. This option would have added costs. but this is a viable option. Another possibility is to incorporate online sales with online sales is push sales, creating a team that can sell our products outside the bistro and bakery setting. Making adjustments to the marketing mix to fine-tune pricing and promotion is justified and can drive sales. But there's also other possibilities to making adjustments to product. Cutting costs can also make a lot of sense. The variable cost is roughly 45% of the sales revenue. Finding an alternate manufacturer or farmer, or by eliminating the middleman to produce coffee beans, can greatly reduce our cost. I hope you guys enjoyed my presentation. Until the next time, be good, be well, and God bless. Thank you. Have a good night.